Greetings, Jedi traders. David here of TradingFibs.com to bring you the index recap and daily trend for January 6th, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing your trade. 2016, it's been a couple weeks and we are already on the go here on all four major indices, including crude here on the left. So let's get right into it and see what was going on here today in the market as FOMC minutes were released, econ data today, ADP employment report, and international trade, PMI, factory orders, ISM. So a whole host of numbers that lifted this market up, drove it down, and brought it right back to where we started today. So here on the Russell, as we could see this last week here on the market profile, price action for the last 5 days has been working its way down, as we could see, leaving open gaps up above. And I'm sorry, not starting on the Russell. Let's start on the crude here on the left here. So crude, as crude numbers came out today, inventories, we could see price action just continues this bearish overtone that we'll look at the bigger picture here in a little bit. But here we could see price action just opened up a daily gap here, 36.14, finishing down here around 34. So the crude continues its drive down. Here we can see here on the TF, second chart right here, as price action continues to move down, leaving open gaps from up above. The last 5 sessions continues to drive down. 1, 2, 3, 4, 5 as we see price action on the Russell. The Russell of the 4 indices today, as the market action popped in the last, I'd say about last 60 minutes. Russell did not play the game like the other 3 indices, YM, ES, and NQ. So we'll see what happens the rest of the week here out. We'll take a look at that on the longer term picture as well. But again, leaving open gaps from up above. The best picture of all here on the TF Russell is that TF has closed all its open gaps from down below. Love a market that closes and finishes business down below and then rally to the upside. I'm all in support of a long. Always ready to trade in both directions, but you know, any long-term holdings you got, longer-term support is always going to be when the market closes at unfinished business. And when I mean unfinished business, I mean daily gaps. And here you can see we don't have any daily gaps left on the TF Russell. We're only leaving them up above, which tells me we are going to head up eventually back to the upside. Here we have the YM on the middle chart here. We could see price action very similar, leaving open gaps up above, but it's unfinished business below here all the way down to 15,726. We got some serious open gaps. I'll go ahead and show you those on the bigger picture here at the end. But again, YM rallying after dipping down to around 16,720, 700 down here and finishing up near 16,824, which was a former gap, so we went ahead and closed that unfinished business. Coming over here to the NQ, let's go take a look at some of the days. January 6th, we could see price action for the last couple days has just been working its way down here. Here's 2 days on the NQ. You can see squish that up here a little bit again. A couple days, Monday and Tuesday, pretty much sideways action. Real weird, strange action on the NQ this week. Some major serious moves to the upside, taking the whole entire move out and then bringing it right back up. So it's, you know, you got to wait for your setups and be ready to trade in both directions and use your trade management skills. And hopefully you get a runner. If you don't, you get stopped out. That's the way it goes. All right, so anyway, here we are in the NQ, almost taking out a former daily gap, 43.99. We also have unfinished business down below. We have unfinished business above. So when we could settle this stuff down below, this market, I think, will eventually be able to rally up. Again, we know that markets don't make a direct beeline in one direction. We come down, we go back up, we come down, but hey, we got to close out these open gaps before we move anywhere upside. And to look at the last chart here, the ES for market profile. Price action again, you know, the big picture on the ES that we've been looking at over the months here, as the ES has just been all but chop. all across the board with the other markets leaving open gaps above and below. But hey, we close them out. That's what we do. That's what the market does. You take a couple days down, we move up, we come back down, we close that gap. So here's this week's price action. 2 days side by side, FOMC. Econ data out, crude report out as we continue to move down. 1943, 1874.75, two major open gaps. Again, similar picture on the volume profile. I like the volume profile. It tells me how much price was traded at a certain given price, not time oriented. Watching these each day on my charts to see if we go ahead and take those key levels out. Watching the NQ in specific today, we have our 600-day macro VPOC 44.1125. You can see price action came right down there, couple points below, but again settled up above, back into the value area. As we can see, it's been nothing but a mess all across the board. All right, let's jump right into the NQ, and then we'll wrap this up by looking at some of the long-term pictures on all 5 major indices. Hey, we started out today with our technical bias charts that we'll wrap up with today with pretty much a bearish overtone on our bigger time frames, 4-hour charts, daily charts, weekly, monthly. Now, again, none of these tells me that, this is where the market's headed today. Markets go in both directions on any given day, but, when you got a pretty bearish overtone to the day, the stronger moves in my mind will be when all charts are, all the charts that I'm following are in sync with the bigger picture. And so if I get a move on the Russell that's to the bears and to the downside, that's more in sync with the bigger picture. And then that's what I hope will run a little bit more than any counter trend trade. Here we can see down at the bottom the major open gaps. These are some of the numbers that I've been talking about. I'll go ahead and show you those on the bigger picture at the end. But hey, we closed out 1109.04, and we still have some upside gaps up here. But again, and I'll stand by this all the time, eventually all index gaps get closed. And so this 1109.04 from back in October, yeah, it took us about 4 months here to close it out, but hey, we just closed it out yesterday. So that's where we sit, and the TF has closed its downside business. So this is where we started today. Intraday picture on all 4, plus the crude has been in the bearish territory. A little bit of bullish neutral, meaning that the moving averages are still upside, but price action is facing downwards right now. So these can easily move to bearish, and then we got a pretty bearish territory going on. So this chart here updated each day, posted about 15 minutes prior to the market open. So it was all about the NQ today. Let's jump right in. NQ, the charts that we're looking at here, we got the T3 moving average with the 3 charts below, the 2 charts at the bottom represented by the 2 charts on the right here, the 20-tick longer term market internal chart in sync with the 5144. Gotta love that 5144. I'm going to show you an amazing chart here in a couple minutes. The other 2 market internals, the AD line right here at the top, and the tick count. The tick count, an indicator of is the accelerator on the gas right now? Is the market moving in a certain direction? I'm looking for a number above 225, 400 when I take an entry in the market. So here it was post right at the market open. A nice entry to the upside. That was setup number 1, but it was setup number 2. Jumped on that. Look at that. All 4 in the green. Buy signal to the upside. The only thing not in your favor right here was the AD line, which was punching to the downside, but tick count was slightly to the upside. Not where I would like to see it, but hey, ticks are ticks in the end. And the buy signal on a 10.70 Flex Renko chart together with the 20 tick, which was already in the green. You have a crossover on the 534 and the 5144 puts you to the upside, and there it was. Setup number 2 to the upside, buy signal. Taking my first contract off, trade management, always the same, taking off at a certain number of ticks, 16 ticks first contract off, and it was all about management on the way up. Management by moving my stop up to the previous low, finally seeing that price action crossing over here on the 20, seeing that price action again. Hindsight, you'll see here for the day, if I had just kept on this entry from the get-go, what a day it would have been. But hey, I keep the same rules every day. You never know which way the market's going to go. So if I'm taken out, hey, I'm going to look for another entry. And so there it was. Setup number 2, and second contract comes off. AD line not punching upside yet, so I didn't have the confidence the market was still going to move upwards. Tick count was moving down. Price action, still to the bullish side here as the 50 was above the 144, but 20 tick was downside. I had a 534 crossover. That was enough for me to exit the trade. So setup number 2, again, remember that 600-day VPOC that we talked about on the volume profile. So there it was, setup number 2. I am out, and there it is, right back in the market again as the AD line market internals popping upwards. Tick out at 599. That's a lot of buying there, and so 20 tick came right back upside. Price action held up at the 50 period moving average, and there was setup number 3, 2 contracts. First one off, decided to come off at fellow trading room members Morales levels 44, 44, 50. Hey, who knew where we were going? At this point, it's all about trade management. So setup number 3, contract is off, and what did I tell you? I told you about that 5144 chart. Got to give kudos and respect to it. Look at it. Price action moves up, bounces just barely off that 50, finds a little bit, almost a little gap there, and bounces right back upside. So 2 things you're looking at here. You're looking at the 50 above the 144. You're looking at price action above, giving you that bullish bias, that technical bullish bias. I'm not saying you're going to stay in this trend the whole entire time, but as long as these two lines are above each other and price is above it, you have an opportunity for a re-entry. And so setup number 3, there it is. I am out. Price action, coming down a little bit on the 20 tick. Didn't cross over. AD line is holding here. Tick count coming down right here at 404. And this is our 1030 reversal. And so I decide, hey, you know what? I'm gonna take it off. Price action crossed over. I'm gonna decide to wait for a re-entry. So there it was, setup number 3, and gave me another opportunity. Again, a little bit of chop action there for about 30 minutes, and then right back to the upside. Now you can see I didn't enter here right at the buy signal. The setup on the AD line was still pretty flat. Tick count was up at 500. Price action, and what gave me the opportunity is I looked at a smaller time frame for this entry. I didn't get in right here at the initial. 50 was above 144. A lot of chop action here right at the 50, but it was this right here. The 20 tick was in the green right there, indicated by the 3rd chart right here. You can see it turning green here. The crossover, 50 above 144. Price bounces off. Tick count at 519. AD line is green. I'd love for it to push above the 10 period moving average, but we're headed back upside on a smaller time frame. So there it is. Setup number 4 to the upside, and boom, first contract up right at the naked VPOC and the cam low 44.53. AD line is in the green. Check out that tick count, 963. 51.44 is still in the green. 20 tick is upside. That's right. Setup number 4 is price action continues to the upside. And finally, setup number 4 takes me out as price action came back down. By the rules, any day, hey, you know what? There have been days when price action came and ripped all the way back down. So I want to get out as close as I can to the high in my second contract. I'm not wanting to sit in, especially with a late entry here. So again, all other indicators are still upside, but I decided to take this off. Setup number 4 as we led into setup number 5, leading into the here we were at the European close, and so setup number 5, as we can see, market action came back down off that previous move. So glad I didn't stay in that. And so European markets are closing here. We got about 10 minutes to go. Price action, buy signal to the upside. Tick count above 400. Look at that. We found that. So that was that price action coming down here that you saw. It didn't go with the counter trend here, as I saw price action might find support here at the 50. The overall technical bias is still to the bulls. So I'm looking for the bullish move here. Buy signal, bounce off the 50. Tick count is now the 20 tick count. You can see hasn't crossed over here, but I got a solid hike in Ashi bar moving upside, and I got an AD line that's in the green, and I got a tick count here that's also in the green. Again, it's a probability game by any matter, by any day. You don't know that it's going to run. It could obviously become a loss here, but the price action continued to move up here on setup number 5 to the upside. First contract off right here at the naked VPOC. As we see the 20 tick continue upside, solid hike in Ashi bars after bouncing off the 51.44. Tick count remains to be in the green. Price action continues to the upside. And so again, by all standards, by all trade management rules, I decided to do the same thing. Price action crossed over. Here I am, European close. Price action is now upside on the 20 tick after crossing upside, and I am content. And at this point, price action, we know we're leading into FOMC minutes, lunchtime action. I was willing to just pretty much sit out the rest of the day. And so there it was, FOMC. I didn't pretty much sat out the rest of the afternoon price action. Eventually, I missed this entry. It was a great entry. This is 237, so 37 minutes post FOMC minutes release. You got a sell signal here. You got a 534 crossover, and you got a 50. Look at this. 51.44 after reject. After this is about what, 10-15 minutes. Price action breaks down here, and the 20 tick. Here you can see the 20 tick chart. Now again, at the beginning of the move, the 20 tick was just starting to move down. There you go, your solid Heikin-Ashi bar here. But look, price action was not fighting you too much here. Wasn't breaking above the 144. You got an AD line coming downside, and you got a tick count that blew past that 700. So of all indicators, if you didn't get it on the initial entry on the 10-7, you most likely could have gotten it on a smaller time frame. But again, I sat out of this as well, and look at that beautiful run. I know woulda, shoulda, coulda, and hindsight and all that, but I decided, hey, you know what? Ticks in the morning, that was great. You never know what FOMC minutes or release are going to give you for the day, and so there it went. But that's the whole idea right there. By any other standard on any other given moment of the day, that would have been a great entry, but I decided to stay out of it. But there it went. That's right. Look at that. Solid Heikin-Ashi bars. Color cloud in the background to keep you in. You got all four charts in the red. You got a tick count that's in the red. You got an AD line that's keeping you in. And so that was setup number 6. Sat out of it. So in all, setup number 5 setups for the day. 5 trades, or actually I should say total trades was 8, but divide that by 2. And so there I had 4 trades for the day. No losses there for a total of 184 ticks. Content with that to sit out. So let's take a look at some of the other indices as we look here at the crude with its release here of its minutes today. Here we see the crude release, and best probably setup of the day would have been here on the T3 moving average crossover with all 4 charts in sync. And after that, crude pretty much chopped sideways at the high, right at about 34 bucks. As we see the crude continuing to move downside. We'll look at that on a bigger picture here in a moment. TF Russell, again, best entry of the day, even though you had some T3 moving average crossover with the 534, was these 2 moves right here. This was actually pre-FOMC release as price action moved down. This was the smoother move in sync with the other markets as they came down. Sell signal here on the TF Russell, but it was that bounce back upside. Did not bounce as high as the other 3 indices did. And so here you can see on the YM again had some nice pre-FOMC minutes release set up, but here it was just like we saw in the TF Russell, started to move down here in sync with the other 4 major indices to the downside. That was probably one of the better moves of the day, and then bouncing back upside the YM with the other 3 major indices. The TF did bounce back upside, but not as not like our other 3 indices, the YM, the ES, and the NQ. ES was all over the place today. Again, you can see the bottom chart is the 51.44, pretty much 2 colors for the day, green and then red right at minutes release of the FOMC. So again, all movements pretty much to the upside in the AM session. I didn't give this a color code here because the smaller, I didn't shade this in here at about 11 o'clock because all 4 charts weren't in sync. But that gave you some nice ticks on the ES, and then it was all to the downside in the PM session. And then we saw what happened at the post FOMC, or actually with about 1 hour to go in the session, the market just continued to rally to the upside. And there on the NQ that we looked at today, it's AM session setups. 6 setups in total that I would say throughout the day that were the best. But here we see from the market open, those 4 setups. Again, these are re-entries, and I was talking about how to how I simply moved the stop up to the previous low. So again, while I was managing this was one complete setup, but these were possible re-entries. I'm not saying that you would have continued. Your stop might have been taken out, but again, early entry from post 6 minutes. This was the first entry down here, post 6 minutes. Managing it on the way up. I know hindsight is great. You could have managed this all on the way up, but I didn't. I simply was stopped out by the rules of my trading plan. and I look for the reentry on the highest probability with all charts or most of the charts in sync. It was the PM session that offered the second opportunity to the downside. We just mentioned that on all four charts pretty much in the red. And then it was about mid move here. You would have to gone to a lower time frame here on the NQ as price action already broke the 50-144 at this point, even though it's red because they hadn't crossed over, but price action was above the 50-144 right at this point, about 311 entry on a smaller time frame that might have put you in, pullback entry, and then there it was, the final entry. Again, these two entries, actually these three setups, I decided to just stay out of and call it a day. So where do we stand on the NQ? Taking a look at the big picture. Here we are, the technical bias. Again, we shifted it slightly. This was early morning session, bearish to the downside. We shifted that in the post session in the afternoon, but all major pictures still showing to the downside. And we'll take again a look at this on the bigger chart. But what I want to show you here is the, let me see here. Let's go jump to the Fibonacci here in a second. But again, taking a look at the bigger overall technical bias, we could see that here on the 75 tick chart, 4-hour charts, we're kind of split here, but mostly still bearish. Monthly, weekly, and daily. This is what I was talking about at the beginning when I say that the market is in a bullish but neutral position. It's because price action is coming down here on the Heikin Ashi bars, which are coming down. But again, the 50 is still above the 144. The 50 is still above the 144, which still gives me the technical bullish bias. So kind of split across the board. Tough place to be. Love it if they were all in sync. So let's jump right to the long-term TF Russell. And I wanted to show you the open gaps that we talked about at the beginning. Here, if you take a look, again, I've closed this out. This was the open gap back from October 1st, October 5th, that, market action rallied all the way up here, and everybody's getting excited. The market's coming down. The market's rallying upside, and eventually what do? We come all the way down, and that's right, we closed it out. It didn't take us a year. It didn't take us 10 months, half a year. It took us about 3 months, and there it was 2 days ago. We closed out this 11, I think it was, let me see here a second. I think it was about 1104, or I said 1109. That's right, 1109.4 price action on Monday. Closed that out. Now, knowing that we closed out that open gap from back in October, you can see price action now is leaving some major serious open gaps to the upside. Fibonacci extensions as we move down. Next target downside is 1060. It's the Russell that doesn't have any open gaps to the downside. But here, open gap from Monday over the weekend, and then from Tuesday to today's price action on Wednesday, now leaving a second open gap. So who's to say where we're going tomorrow? Technical bias for the TF that we mentioned all the way at the beginning. The technical bias still remains to the bear side. So we have to wait and see, obviously, for intraday action. But any movement that still continues downside, I could see us at least maybe perhaps coming down here to 1060.01 if price action does continue to come downside. YM, again, same picture. We leaving some open gaps up above. But it's this open gap that we have not closed out down here. And again, the technical bias on my charts that you see posted each morning, we have a 16,302 that we need to come down here and close out before I believe this market will eventually run up and rally and do well. NQ, we take a look here. We have one open gap, two open gaps, three open gaps as we found support or resistance here at the 200-day period moving average, and that's it. NQ having to work its way all the way down. If you take a look at the technical bias here, we got 42.5175 that we need to come down and close out before I believe this market will ever really rally up. Now, we can rally here and continue upside, but unfortunately at some point this market will come down and close that out. So be prepared for that at some given point. All right, last two, let's take a look at the ES as the market continues to make its way down here. We got one open gap, two open gaps, and there it is on the ES all the way down here. We mentioned it before. Again, on our technical bias chart, we have a 1934.5. That's our bottom number there, 1934.5. but as we work our way down here, we're leaving some open gaps up above, and eventually we'll have to come back and take care of those as well. And to finish and wrap this up, we have the crude working its way down. I think you've got the picture, the bearish bias that continues to hit one Fibonacci target after another. Let's go ahead. We didn't even close this out, so we got another open gap up here that we've never closed out. We got an open gap up here that we never closed out. So market eventually, yes, we know will rally back upside, but as we move down, we know the market has been talking about $28, $30 as a low number. That would be a full Fibonacci extension down there at 261.8 Fibonacci extension. So this was our technical bias as we lead into tomorrow, Thursday, January 7th. We have jobless claims in the morning. Fed speakers are up both Thursday and Friday.
Long
Natural
setup.
gas report. Watch that. That seems to be a mover these days, just like the crude. So bearish bias overtones, technical bias doesn't mean the market won't rally. We can always rally. Go out and close those open gaps up above, and then hopefully at some point we come down, close that unfinished business, and then eventually work our way back up. And hopefully 2016 might be a rally year, and support those bigger long-term pictures that you have, our bigger term portfolios. That concludes today's insight and state of the indices and daily trend. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra of one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts, regardless of what the technical bias is. Have yourselves a good day, a good night, and good trading tomorrow, Thursday, January 7th. Have yourselves a blue zone day.